Look, I was gonna do this Zoom on more of the technical analysis, chart reading, and all of that good stuff. But most of the people that reached out to me, um, they're beginners, so they don't even know like what the stock market is. So it would kind of be pointless to start with trying to understand how to read a chart when you don't even know how the stock market functions itself. So for today, we're going to just go over just how the price moves and what moves prices in the stock market because that's what you take advantage of. So whether you trade in short term like day traders, um, swing trading, which basically just means that you're holding a stock over a day, but you're taking advantage of a swing in price so that you could take profits on it, or long term, whether you holding a stock, um, not to necessarily just take profits out of it, but you're holding it to increase, you're gonna ride the stock as it increases value of time, right? So all of that uh, needs price movement for it to happen. So we need to understand that before we get to looking at how to read charts. So I can see the chat. So let me ask y'all this. If if you could own any small piece of a company, right, that you know of, any company, what company would that be? And drop that in the chat for me. Like any company, it doesn't matter. Like you can say Piggly Wiggly if you want to. Oh. All right, so yeah. Yeah, well, that's basically what the stock market is. So, it's really like it's a way for us regular people um to buy small pieces of a company. And those small pieces are called shares. So we buy shares of the big companies. And when you own shares of that company, you basically a part owner of it. So people, but people invest in the stock market for a few reasons though. Um, like some people do it to grow their money over time, like when I mentioned the long-term investments. And that would go hand in hand with people just, trying to build wealth, you know what I'm saying, for the future, like generational wealth. Um, when it comes to like if I'm looking at a long-term stock, I look at um I try to I would prefer to have a long-term stock that pays dividends. And what a dividend is basically the company is paying you a portion of their profits for owning the shares. So not only would you be able to take advantage of the stock price actually going up itself, but you actually get a piece of the profits at the same time. So some dividends pay quarterly, some pay annually, but every quarter or every year you would get like some may pay 50 cents per share, and you would get that at the end of the quarter of the year. So that's like money on top of money, right? As far as long-term investment is concerned. And contrary to popular belief, you don't even need to be rich to trade stock. And with platforms like Robinhood, like I know they get a bad rep, but man, you could buy fractional shares on Robinhood. So you can have a company that costs $1,000 per share, and you can buy $20 worth of that company. You don't need the whole $1,000 to be a part of it. And I remember when I started investing, I believe I started with like $250, but I know people who started with $50. So it is there is no set amount that you need to get started or nothing like that. You should do that based on your financial situation because we all have different responsibilities. So if you can spare $10, then start with $10. If you can spare 100, start with 100. But when you start, don't look at that 10 or that $100 like it's gonna make you rich. You know what I'm saying? Use that 10 or $100 to actually learn with. So look at that 10 or $100 like, okay, that's what I'm paying to teach myself, or that's what I'm paying to learn. Because if whether I have $100 invested and you have $1,000 invested into the same company, man, we watching the same news. The good and the bad news is going to affect our money the same. It doesn't matter how much we have in it. So whatever mistake that you could make with investing, you're going to make that whether you have $5 or 500 in it. But you would rather make your mistakes with $5 than with $500. It hurt a little less. But even beyond that, right? Like that's you investing with your money. On Webull, they actually let you paper trade. So you can use virtual money to actually practice before you use your real money. And unfortunately, I found out about that late. So I started out with my money first, and then I found out about virtual trading later. So I made a lot of mistakes with my own money. But when it came to because we're talking about just buying shares here, and I don't want to get off into something else. But I use the virtual money to learn how to trade options to get my strategy down with that because that's a little more riskier than just buying shares. So um I use virtual money to kind of, to practice a little bit before I hopped out there with my real money. But Webull is good for the paper trading. Robinhood is more user friendly, so it's easier to navigate. And it's just if you're just starting out, like they explain everything to you, it's just a little more clear. One, two buttons here or there. Webull is a little more complex, but Webull has more resources as far as education and as far as the information that they provide on the chart. So I actually use both of them. Right. So um but yeah, what Robinhood is definitely if you just starting out, man, like I said, you might hear people talk bad about it, but I would start with Robinhood just to get a feel for it. And then I will open up the Webull just to do the virtual thing too. So, but yeah. So, all right. So basically, this is just more of what I just said. So the stock represents a small piece of ownership in the company. Um, and so let's say you buy like we all know who, Nike, right? Nike. Um, if if you buy one share of Nike, you technically own a piece of it. So now you would be considered a shareholder. So uh, once you become a shareholder, if that company grows and the stock go up, the money you put in it, the value of your money goes up as well. So imagine having um, looking at a pizza with slice into 100 slices. You owning one slice means that's the piece of it that you own out of the whole pie. Like, so don't worry about, man, like people make this more complicated than what it really is. Like, don't worry about looking at it like, man, I only have a half a share of Tesla because I couldn't afford to buy the whole share. Like I'm not sure what Tesla is trading at right now. But I remember one time Tesla was trading over $1,000. And man, if you're looking to invest, man, you might look at that and it might discourage you. You know what I'm saying? Because believe it or not, the average person don't even have $1,000 saved up. So when you looking at that, man, it could be intimidating. But if you use Robinhood and you buy a fractional share, so let's say you go and you buy $100 worth of Tesla, right? You don't have a whole share, you have a fractional share. If Tesla goes up 50%, if Tesla goes up, yeah, what'd you say? Oh yeah, see, Tesla, what, 329 right now? Right. So if you put $100 in that and Tesla went up, let's say 40%, right? It doesn't matter that you don't have a whole share. You're gonna earn a 40% return on that $100 the same way that the person who owns a whole share will earn 40% of what they have invested as well. So look, just start, build it over time. So you can put that $100 down on Tesla, and Alex says trading at 329.65. So put that $100 down, and then you could put on a recurring deposit or something, and just invest $10 into it every other week or something until you build it up to where you do have a whole share. But the value of that stock may change, right? But that doesn't matter when you're looking at the percentages, right? So 40% of 100, 40% of 329, um, 40% is 40%. So we can have a different amount invested, but 40% is 40%. Yeah, so fractional shares, man, that actually um they changed the game with that for sure. For some of these stocks high, man. Let's see. So, why do stock prices move? And I'm gonna try to get through this. I'm not trying to hold y'all all night. And matter of fact, like I'm just gonna go through this, but after we get through some of these basics, man, if some of y'all want to stick around, maybe we can talk and go into some of the deeper stuff. Um, but yeah, so why do stock prices move? It's all based on supply and demand. So, um, scarcity creates, that's what creates value, right? And when I say prices are driven by supply and demand, that basically just means it's based on how many people want to buy or sell it. You know what I mean? So, um, I use Jordans as an example, right? Um, if if Mike is dropping only 100 pair of these exclusive Jordans this weekend um in Georgia, 'cause that's where I'm at, right? And it's only going to be 100 pair at the mall, man, he can name his price for it. And that's based on the supply because it's 100 pair available, but it's probably 100,000 people that want them. Right? So the demand is higher than the supply. And that's basically, you know, that's basically how stocks move. You know what I'm saying? So if it's just like let's say um if a company is doing pretty good and it's launching a new product, which I know some of y'all have Apple products, right? iPhones. I think I saw an article the other day. They're dropping a new phone or something soon. Um, so um, that's positive news. So if you know, if people, if you feel like that's going to be a hit, I know some people that are addicted to Apple products. I'm not going to call names, right? I know people that are addicted to Apple products, right? And they will, the people that are, they're going to see that as positive news, and um, that could make more people want to buy in, to Apple stock, once they see that. If they think that they're about to do something to change the game or that will put them above, the competition. And the more people that buy that, man, the more that stock price is gonna go up, Just like on the other hand, if it's some bad news, if you hear about um a security breach with uh, iPhones or Apple, some Apple products, then the company, people gonna start selling, and then the price go down. So, you know, it's kind of like but it's all it's really the stock market is it's the same concept though. Um like it's kind of like how like I said, how the price of the sneakers go up if everybody wants them, and that's based, and especially if it's a limited supply. It's like the same concept, and which are bulls are people that are expecting price to rise. So most often they're not like when you hear that term bull, those are investors that feel, confident and optimistic. You know what I'm saying? So with bulls, buying is more common. All right. And they always expecting price to rise. So once again, once we get off into um, the option side of it, then we'll probably talk a little more about that. Um, but I'm not gonna go there right now. It's hard not to because I like to trade options. But on the other hand, you have bears, right? And bears are the pessimists, and they're usually fearful. So they bet on stock prices going down. You know what I'm saying? They look for stock prices to fall, and selling is more common with them. But when you hear bull and um, bull market and a bear market, those terms are mostly applied to the overall market mood, not just like a single stock or nothing like that. You know what I'm saying? Like you might see one day that a stock is being pushed up, and a person might say it's on a bull run or it's bullish, but that's all it means is that the sentiment is that everybody is expecting the price of that stock to go up. So they're considered bulls. You know what I'm saying? And in the option world, you can bet on stock prices to go up and you can bet on them to go down. So um we'll get more into that later, though. So, common things that drive price, right? So, this right here is important because when most people don't know where to look for stock, and even if you do know where to look, if you know what website to go to, you really don't, you can see the news, but you don't really know what to do with it. You know what I'm saying? Like you don't know, it's a lot of people don't know the next step, right? So, um, with just like you know, fashion, sports, or anything like that, the stock market has trends and moods, right? There's emotion involved in trading. So the stock market reacts to news. It reacts to like earning reports, global events like the pandemic, right? And even social media. Like I know all of us have seen when Trump has tweeted something out, it's either made the market go up that day or go down that day, right? So, um, The first one is company news, right? So, it's kind of self-explanatory. You know what I'm saying? If a company reports good news, that's gonna make people want to buy it. You know what I'm saying? Just like bad news make people want to sell it because they want to manage their risk or protect their money. Like you're not gonna stay on a sinking ship. You know what I'm saying? But you also don't want to miss out. You don't want to miss out. If like we just used the reference with Apple, but like if Apple is doing something, dropping a new product, man, that's going to be good. You're going to want to hop on that. Like, a good investment is a good investment, right? Um, okay, when it come to trends, right? And each of these that I have right here, I'm going to go into them a little deeper, but um, so when we think about trends, right? Um, there are three trends that when you look on a chart, that's what you're gonna see. Like a stock is either gonna be going up, down, or sideways. That's how you look at that. Like that's the most simple way to put it. It's going up right now, it's going down right now, or it's trading sideways, right? So if you're in the uptrend, then that basically means the stock is going up. So you have more buyers in that stock than you have sellers. Because remember, right? Stocks go up when people buy, they go down when people sell. So if a stock is in an uptrend and you looking at it, most of the time when we are charting it or looking at a chart on a day chart, we looking at the trend of a stock over a large period of time. So we're not, right? I'm not talking about it being in an uptrend for 15 minutes. I'm talking about it being in an uptrend for the last year, 6 months or something like that. So, that means that for that period of time, that 1 year, that 6 months, that stock has had more buyers in it than sellers, And for a downtrend, the opposite, it has more sellers than buyers. Okay. When a stock is trading sideways, that means it doesn't really have a direction. So we consider that consolidation. So you might hear someone say, hey, this stock is consolidating. That just means that it's trading sideways. It doesn't have a direction. So it's trading in between a range. You know what I'm saying? And I'm that would that this particular part right here would be best served with me showing you on a chart, you know what I'm saying, to put a visual with it. And I have a few examples, so we'll get to that, right? But it all makes sense once you're looking at it, right? Um, okay, so next, global events, right? And global events can change how investors feel about risk, opportunity, and the economy. So some events cause fear, which lead to selling because people are scared, while others can inspire optimism, right? Which leads to buying, right? Like I said, global events, which some of the most major things, man, was the pandemic, right? When COVID hit, man, everybody was scared. That's why the market tanked, man. Like the world was shut down. So, of course, that's going to change how investors feel about the economy because the world shut down. You know what I'm saying? Um, you didn't know how some companies were going to survive after that because of the shutdown. A lot of companies went out of business during that time, right? So on one hand, you would have wanted to protect yourself to get out of some of them, companies because of the fear of the unknown. While on the other hand, maybe you were looking at it like, man, everything is on sale right now. And that's the opportunity side of it, right? It's like some stuff you just like, I know it's not going nowhere. So you might have looked at that like, man, I'm gonna hop in there. You know what I'm saying? Um, but pandemic definitely caused fear and led to a lot of selling. We look at let's see in the more recent things. We could talk about the tariffs, man, that Trump been threatening right now. Um, that made people fearful, because we don't know if, like, with him threatening those tariffs, you're looking at the price of goods that are imported from other countries to here going up, which means if they have to pay more to import them, then that means they got to charge more. Like, they're gonna charge more for them. So that falls on us, the consumer, having to pay more, right? So that could lead to fear. When he first started talking about tariffs, man, stock market went down. The first day he talked about him and China talking to get to a better space with that, stock market got a little boost that day. You know what I'm saying? And that when it got that boost, him saying that they spoke, that inspired a little more optimism where people started buying. You know what I'm saying? So that's just an example of how, like, global events, like world events, even the war between Ukraine and Russia, same thing. Like, once that happened, it affects stock, you know? And you just have to figure out which stocks it affects, you know, to stay ahead of it. You know what I'm saying? Whether that be on the side of you finding things that are on sale, um, things that are potentially go down so you can get out of it if you're in it, or things that may go up as a result of it, you know? Um, so yeah, so last is investor emotions. Like, a lot of people, just the part that people don't talk about that much. Um, Not only, like, right now, I'm just talking about how how investor emotions affect price right now. But man, you go through every emotion investing and trading in stock. You know what I'm saying? One day you could be happy. One day you could be sad because you lost. Anxiety can kick in, right? All of that. And you can have all of that in one day because your money on the line, every day when you invest in. But in regards to, like, investor emotions, um, most times price moves because of people's emotions, right, and decisions, and more so than logic, right? um Fear and greed, right, controls most of the market. you know um you might have heard FOMO, FOMO, and that's the fear of missing out. So um if it happened with, what was the I think it was AMC and GME, man, those stocks was running, people was just buying it. You know what I'm saying? People was just buying it up, and they didn't even know why they was buying it, other than it was just running and everybody was saying buy. You feel me? Like, so you had the fear of missing out plus greed, mixed with that. And because people did that, it ran the price up. You know what I'm saying? So that's how that affects price. The same with Doge and, like, crypto and stuff. Meme coins and meme stocks. That's fear and greed all day long. And it definitely um drives price. So now I'm gonna take each one of these and go a little bit deeper into them, right? So, like, let's talk about the company news, right? And go a little deeper into that, right? So, um you might look at a website, and it might have that a company reported earnings, right? Either they missed earnings or they beat earnings, right? So it's two parts to that. Okay. You have um the EPS, right, which is earnings per share, right? Then you have revenue, right? So if, let's say, and this hypothetically, let's say that okay, Tesla, right? is trading at $300, right? I think he said 329. $329. Tesla trading at $329. Um, but that is, let's say they expected it to trade at $335, right? For the last quarter, right? That means it missed the EPS by $6, right? That means it would have missed because we looking at earnings per share, right? Based on where they predicted it would go, where it would average, the increase that it would average over that following quarter. So it might miss the EPS, right? Earnings per share. But let's say that they expected Tesla to make $1 billion last quarter and they made 1.5. Then that means they beat on the revenue side, right? So on one hand, they missed, and on the other hand, they beat. Um, if That's kind of tricky, right? So playing earnings is tricky, right? You would think that when a company makes money, right, they beat what they expected to make, that automatically means that the stock will go up, but this the stock market. Nothing is guaranteed. So don't look at it like, hey, I know that Tesla is out here selling a lot of cars, and I know they made some money last quarter, so I'm gonna go buy it because it's guaranteed that it's gonna go up. Man, I've seen companies beat on both, right? On top of putting out a new product, they still drop. And I can't explain to you why that happens. Other than saying that, man, that's just the market. Nothing is guaranteed. It's a lot of things that come into play with this that, we're not on the inside, you know what I'm saying, to see. I can't even explain that to you. But regardless of whether that stock goes down or up based on whether or not it beat, right, or missed earnings, it doesn't matter because the report itself made the price move, right? Up or down. So that's the point, right? When you see an earnings report coming up or an earning report has came out that day, man, you go look at the stock to see how the stock is reacting to it. Because that's the point of what I'm saying right now. That is something that moves a stock price. Whether it be up or down, it's gonna move it. So that's one thing, right? That makes a stock move up and down. And that's one thing that a day trader could use. You know what I'm saying? Because if a stock beat earnings today, and let's say that the report came out before the market opened this morning, and it went up in the pre-market and it looks like it's gonna have a great day, then you can look forward to there being a lot of volume, which just means a lot of activity, a lot of trading with that stock. It's gonna be a lot of buying and selling. Um, and that stock may keep running and you could take advantage of that. You know what I'm saying? You could take advantage of that price action. It might run up some more. You might be able to catch the end of it, even if you didn't catch it beforehand. You might still be able to catch it, that day because the stock is going to react to that report, whether positively or negatively. We have to see that part, but just know it's going to move up or down based on that. So whether you invested in something long term, you swing trading in or whatever, if one of your stock has an earnings report coming up, pay attention to whether or not they beat it or they missed it. Um, okay, so another thing, right, that you look for, right? And these are just things you can any stock you look at, you can scan for them, right? Um, you look for new products, man, and innovation, right? Um, um, if you know a new product could signal future growth potential, which in a lot of cases, that usually leads to a positive impact, you know. like especially like when it comes to AI and stuff, like a lot of companies moving into that. So if you have a company that um isn't an AI company, right? Like they hadn't been using it like that, and they make an announcement that they're partnering with an AI company or something to come out with a new product, that's usually good news, right? So that tells you that that gives you a glimpse into what they're looking to do in the future. They're trying to keep up with the times, right? More than likely trying to keep up with their competition. And AI is the future. There is no way around it. You know what I'm saying? So for a company that don't use it right now, man, you seen as a dinosaur, you know? So I'm sure anybody investing in a company right now that some news come out about them creating a new product or something by partnering with someone using AI, or if they're creating a AI product themselves, that stock is probably going to do good. So always keep your eye out for what's new. I give y'all an example, right? Um, Man, it was probably a year or so ago. I ran across this company. Ticker symbol was ASTS. And I'm a real technical person. So I look at charts, man, like that's my way, right? I'm a technical person. I like to read charts. I looked at the chart and I saw an opportunity to buy it, and I weighed the risk versus the reward. And I was like, man, I charted it out and I could see that I had the potential to make maybe 130% off of it. And I was only going to risk losing 30%. So I was going to risk 30 for the chance to make 130, right? That sounded good for me. So shared that in the Discord, and we jumped in. It hit that 100%. But as of today, that stock is up 2,400%, right? And one of the reasons it did that, like one of the articles I had read at that time was that that company was the only company in the world that had the capability for um, cell phones to work in space. Like they had the only cell phone tower in space for somebody to make a call on a cell phone, from cell phone to cell phone, in space. And when you think about that, like nobody's calling each other in space, but if you think about like how advanced that is, like that's innovation. Like that is so advanced. Like, if you're looking at the future growth potential of a company that has that capability is one that you want to be a part of, right? And I believe that stock has gone up as high as over 3,000% for some of us. I think quite a few of us are still in it even today. And since I found it back then, man, they've gotten contracts with the government and other companies. It's been a lot of stuff. But I said that to say, that's an example of innovation. You know what I'm saying? Um, okay, so you will hear about mergers and acquisitions, where companies merging together, or one company is buying another company. Um, that right there, man, it's hit or miss, right? When you see that and you read that and you go look, it's hit or miss. I've seen that work both ways. Um, uh, like it could be a company that's buying a company that's in debt. You know what I'm saying? But they're about to take over that company and do what they do with it, and people could see it as risky. You know what I'm saying? And that stock could go down. Or you can hear about a small company being bought by a big company with a lot of reach. Let's say like a Tesla, or Nvidia, or Apple is buying a small, a more small cap company, and that make that company run up. You know what I'm saying? They don't even have to merge it's just the news about them potentially merging could make it run up. And that's when you hear about people saying, hey, buy the rumor and sell the news. So the rumor could be that Apple is about to buy company X. And just that rumor could make company X go up 100% that day. You feel me? And then when they actually make the deal and the news come out, it can go down 50%. You know, that's just how the market works. So when you see mergers and acquisitions, that impact could be positive or negative, right? But when you see it, just know that it's going to affect the stock price one way or the other, whether it's positive or negative. And you just have to look at it to see which way it's going to affect it. But when you see that a company has merged, go take a peek at it, right? When you see that on the headline, um, man, layoff and cost cuts, right? Man, I hate to say that it's kind of messed up to say that layoffs have a positive impact on the stock, man, because you don't ever want to think about nobody getting laid off, right? But when it comes to business, right, and the bottom line, man, you cut expenses, you increase your revenue. And so when you hear about people, it's crazy, but when articles come out about certain companies, laying people off or closing stores sometime, to save money or whatever the case may be. And in the short term, it can have a positive effect. Like that day, it can possibly boost it up. You know what I'm saying? Because people could see that as them being more financially responsible, like they making financial moves. If they're cutting, we looking at people reporting earnings quarterly. So if they laying off people and they cutting costs at the beginning of this quarter, then that should increase their revenue and stuff for the next quarter. I'm sure that's why they're doing it. You know what I mean? Because either, man, numbers are exact. So either you add by subtraction or you subtract by adding. Like if you make, $50,000 a year and your bills are $40,000, that's gonna be what that's gonna be every day, all day. Those numbers aren't gonna change unless you change them. So either you have to make more money, right, to keep more money, or you have to subtract some of those expenses. You have to cut your expenses from 40 to 20 to keep more money. So either you're gonna add by subtraction or you're gonna subtract by adding. No other way around it. And when people see people laying people off and doing stuff that cut costs, man, that's a positive in the mind of a lot of business people. So like I said, in the short term, you probably be able to take advantage of a little positive boost off of that. It might return back to normal, a little later. All right. Um, Lawsuits and scandals, we already know that is not good. You know what I'm saying? For any business. So if you see that your company being sued for something crazy, a company you invested in, or they had some scandal going on with the CEO, um, man, that stuff can lead to bankruptcy. You feel me? Like, so it creates uncertainty and risk to your portfolio. So you definitely, when you see that, oh man, hey, dig a little deeper, to make sure you protect yourself. You know what I'm saying? Because a lot of companies get sued. Like I see, some companies could withstand it. Like I see Apple and stuff get sued all the time, but they too strong. You know what I'm saying? But that's rare. That's not the case for the majority of the companies on the stock market. There are only so many Apples and Teslas. There's a new company that arrives every day, you know what I'm saying, into the market. And most of them aren't a Google or Microsoft or nothing like that. Those are like the top, 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 top. You know, the average company not touching them. Okay. Um, Guidance and forecast, right? This kind of like it goes hand in hand with the new products and innovation. It's kind of like the same thing, right? If we're looking at a company that's looking to do business with a company that does AI in the future, right? Um, you would hear a company come out with a guidance or a forecast, and that's basically what that is. They usually do a call and they tell the investors what to expect for the future, like what they're working on, if they're gonna cut back on something, or if they're gonna shut a program down, program down that they were working on, or whatever the case may be, right? Is guidance and forecast. That right there definitely has a big impact on price movement, right? Um I man, and it could be either way. This is one of those things where it could be either way. It can have a good one or a bad one. You know what I'm saying? But I can guarantee you that anytime that comes out, it's gonna mess with the stock price, right? So yeah, so uh y'all could man write these down, screenshot, whatever. But when it comes to company news, because most stock, when you pull it up, is going to have a news section, right? And these are some of the main things I would say for, tell you to look at, right? And right now we're just talking about it, you know what I'm saying? We're talking about it. Um, but you're gonna need this later. Like once we get into like reading the charts and all and how to uh spot when to enter a trade and all of that, you're gonna need to keep this stuff in mind because this is the stuff that moves the price. You know what I'm saying? So this is gonna be very, 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 very important to keep up with. When you just scrolling Yahoo Finance by yourself and you see a company, like you don't have to read every article that you see, but I guarantee you, if you memorize these things, right, or you have them where you can reference them, if you read an article that has one of these words in it, right, you're gonna click on that one to see, right? So you don't have to read everything, you know what I'm saying? But read what stands out. These are some of the things when in regards to company news that stand out to me to make me go look, right? So I would definitely you know, write this down or screenshot it, and y'all, maybe later we can come back and y'all can tell me something y'all found or something and we can go over it. I'd be cool with that. The next section, right? So this is the market trends, right? Um, Remember, a stock is either gonna go up, down, or sideways. Yeah, that's it, right? Um, and this is how the trend itself influences price movement. That's what we on. We on how these things mess with the price. And this is you're gonna need this. This all gonna make sense to you later, right? We doing it the old school way. We just talking about it versus me using a lot of you know, AI stuff, right? We talking about it. You know what I'm saying? Um, because based on the way that I learned this and I taught myself this stuff, I went through a lot of I look for a lot of ways to make it easy. But man, you just need the basics, man. If you have a foundation and the basics, you can build on that. That's what you're gonna do. Like, man, it's too much. Like, I don't know everything. It's just I still learn different stuff every day. Like, I still look for stuff to learn every day to tighten up. So basically, I'm just trying to help lay a foundation there, right? And then, we gonna get deeper and deeper every time we hook up for one of these Zoom calls. But all right, so market trends and how it influence price movement, right? So you have news and events that trigger the sentiment, right? We just talked about earnings reports, right? Um, You could talk about interest rates, like when Powell speaks, the Fed chairman, interest rates, right? You could talk politics, like tariffs and stuff, right? So once those things come out, right, it now goes to investment sentiment and how it shifts, right? You got fear versus greed. Okay. The event happens, the earnings report come out. Now it takes an effect on the investor, right? It's gonna either make them greedy or make them scared. All right. And if um let's use greed, right? Let's say that reports came out, um earnings report came out for Apple iPhone sales, right? And it was good. Like it was, the sales were great. So investors became optimistic, right? So now the sentiment is greed, right? Remember, when people are greedy, people are buying. So that means that the buying pressure increases because more people are buying. And when more people buy a stock, so Apple sales were good, so that means more people bought Apple stock, right? That means that the demand for Apple stock increased. So therefore, the price of Apple stock went up, right? So the price moved in the direction of the trend, okay? And as the price is moving up, it's as we see it, me and y'all, right? We looking at that. Dog, Apple moving up. Let's get in there, right? The price going up enticed us to jump in. So guess what? When we jump in, we buying. So because we buying, the price is continuing to go up. So that means that the trend itself strengthened. It went. That's what I mean by it reinforces the trend. The trend was already bullish. It was already going up, and now we're being greedy, right? So our buying pressure increased, right? The price is moving in the uptrend, which is the direction, of the trend. The trend is going anywhere. Then we went and reinforced it because we went and bought some more, right? That's how that works. That is what you're looking at. That is what's happening. You know what I'm saying? You'll probably be able to see this better, um, now that we talking about it now. You know what I'm saying? So let me give you an example, right? Let me give you an example. And y'all hear something in the background. My son, he's playing Roblox. So I don't know what required him to make some of the sounds he make while he playing, but he into it. Um, so let's say back in 2023 and 2024, right? The video, right? Which is one of my boy Tom's favorite. He loved the video. I do too. Right. Um, their AI technology, right? It exploded in popularity. Like they are the ones, right? They're like the leader. They are a leader in AI chips. And they became a favorite amongst most investors, right? So as a result of that, um, it was a very high demand for some of the stuff they use in their AI models, like ChatGPT is actually an NVIDIA AI model, right? And y'all know how much people are using that right now. Comes from NVIDIA, right? So the trend effect on that, right, is okay, positive earnings, right? Plus future guidance, right? Which is their demand, their leader in AI chips, their demand for their AI models and all of that good stuff, their future guidance made investors flood in. So over a 1 year period, their stock price tripled because of that. Like their stock price tripled. You know what I'm saying? And that was, you know, um, that was, that's an example of how that what I was just referring to, man, how like, man, that uptrend, man, like trends matter. Um, so all right, now let me give you an example of like a downtrend. And we're actually using the product right now, which is Zoom. Okay. So like after like when COVID hit, right? Everybody working from home. All right, everybody doing remote work. Um, Everybody was using Zoom. So Zoom took off during COVID. Like, everybody using Zoom to work. And the price of it surged. But once the pandemic kind of eased down and people returned, to the office and user growth slowed all the way down, people started selling it. You know what I'm saying? People started selling Zoom stock. And Zoom had got as high as $559 a share, right? In October of 2020. And by 2022 to 2023, it was under $70. You know what I'm saying? So that bearish trend, right? That bearish trend was driven more by, changing expectations. You know what I'm saying? Like they didn't expect it, user growth to increase, because everybody started going back to work. Like wasn't nobody really using it like they were during the pandemic, right? Because everybody outside. So that's an example of downtrend. So now sideways trading, right? Like sideways trend. Um, Take a company like Coca-Cola, right? Like Coca-Cola. Um, it's a steady company. Like they don't usually have like major surprises or like anything to really disrupt operations or nothing like that. The earnings are pretty stable, but limited in growth. Like, Coca-Cola is Coca-Cola. Like um their earnings probably wouldn't be limited if they started making airplanes or something. But Coca-Cola is Coca-Cola. So, you know, investors hold it. They don't aggressively like buy or sell it. So like between let's say 2023 and 2024, the price of Coca-Cola stayed between $58 and $65 for that whole time period. It just traded in between those 2 points, right? And for the whole year. So that it traded sideways, right? And that sideways trend is due to pretty much a balance in sentiment and no catalyst or nothing that would make the price pop, whether it be up or down, like nothing major, you know what I'm saying? To really push it, right? So I'm gonna show y'all, man, what an uptrend would look like on a chart. I'm not going to go too deep into a chart or nothing, but I just want y'all to look at it so you can kind of like visualize. Like you're going to look at it and be like, okay, that's not hard to, identify. You know what I'm saying? Um, so like right here, right? Clearly, right? This stock is going upward. And this is a day chart. So this chart is going from September of 2022 all the way up to right now, right? Well, May of 2025, actually. And this is how you spot an uptrend on a chart, right? Um, you see like these peaks right here, like there's a peak right here, a peak right there. It's like little mountaintops, right? Yes. Well, that's what we call higher highs, right? Because this is a high, right? It's higher than everything right here. This is a high, right? So I could have touched that, but I went a little further, right? This is a high right here. You see how it peaks above everything else? And this is a high, right? And it's peaking above everything else. So a higher high is this high being higher than that high being higher than that high. So that's why I said a higher high. So every time we reach a high in price, is higher than the previous high that we had. You know what I mean? Just like on the other end, you have a low. So you have a low here, right? It's a mountain like a V, right? Peak right there, a peak right there, and then, a couple peaks right here, right? So this is a low, this is a low, this is a low, all right? This low is higher than that low. This low is higher than that low. Hence the reason we say higher lows, right? So when you have higher highs on a chart and higher lows, this is what it looked like. That's a stock that's going up. That is what you call an uptrend. Okay. So this is what an uptrend looks like. All right. Next, we have downtrend, right? Almost same principle, right? Except for, right, we have a high here, we have a high here, a high here, a high here. Only difference is this high is lower than that high, right? This high is lower than that one. This high is lower than that one. So it's a lower high, right? Just like lower lows, right? This low is lower than that one. This low lower than that one. These lows are lower than those. So therefore, we have a lower low. When you have lower lows, lower highs and lower lows, downtrend, right? Once you draw lines, man, like I said, don't. I'm just explaining. I'm just showing you what it looked like on a chart. But don't overthink this right now, right? I'm not necessarily we're not right now, we're not going through the process of me showing you how to chart it necessarily, but I just want you to visualize what it looked like on a chart, right? And the more that the deeper we get into charting, we're gonna go over all of this and how to really, really, really identify it. We identify some in real time. But right now, I just want you to see what it looks like on a chart. All right. Right here, right? This is a sideways trend and it's considered consolidation, right? There are no lower or higher highs, or lower lows or higher lows. It's just the direction hasn't been established. It's trading sideways, as you can see, right? So you have this right here, a peak, a peak, a peak, a peak. All it's trading within the same range. A peak, a peak. All of this stock is trading between here. So it's not in the uptrend, right? It's not going down. And I'll go back so you can see. Look, this is the uptrend, right? Going up. That's going down. This is going sideways, right? So um we'll get more into this, but um this is consolidation, right? And when I'll say this, right? While I can't man, I gotta talk about the chart. I can't help it, right? I'm gonna get a little bit. Um on charts, we chart support and resistance lines, right? So support is like the floor, right? Like the floor in your house. The resistance is like the ceiling. So what you see right here is like imagine having a tennis ball and you bounce it on your floor real hard and it bounced and hit the ceiling and bounced back down to the floor. Then it bounced back up and hit the ceiling. It bounced back down and hit the floor. And then it bounced back up and hit the ceiling. At some point, this stock is either gonna break above this point, right? And it's gonna shoot up here. And if it was trading right here, this would become the floor, right? And it'll be a new ceiling. We call that a breakout, and that would be a breakout up. Just like if it went down, that'd be a breakout down. So I'm not gonna go into all of that right now. We're gonna chart later, but I just want to show you like this spotting the sideways trend, man, is like you can do a lot with that. Like as far as figuring out when to enter a trade. You know what I'm saying? Like for real. Actually, this when I did this screenshot, this stock was trading at $9.05. if you look up via set right now to see where it is, uh, it'll surprise you. It's probably up, I think, 200 plus percent right now. So it did break out of this range, right? And this is a range. This is the range in between these 2 points. And when you see a stock consolidating like this, just know that at some point, right, it's going to break out of it. It's going to either break up or break down at some point. So you would want to, um, the more we get into the technical side, you'll figure out how to identify or get an indication of when that will happen, right? Yeah, Alex, drop a screenshot of where VSAT is at right now, right? And it's crazy. Like we got in. This is actually one of the trades that I alerted, and we actually bought this too. But it's up. I think it's up. What? I think about 200% right now, if I'm not mistaken. And one of the things that made me buy it was this setup right here, and just looking at it, but. Yeah, we'll say that for a different. Yeah, there you go. 25.62. And on here it's at $9.05. Like we was ahead of the curve on that one. That was another one of those good ones there. And I'll show y'all how we charted that later, man. We get a little deeper. But right now, y'all gotta get this basic. Bear with me. I gotta give y'all this basic stuff first. You feel me? We can't just you can't skip the process. Ain't a there is no way to skip the process, bro. Like you got to go through it. Like there's no cheat code to this. And no matter how much I tell y'all right now, y'all will still have to figure out how to study this stuff on your own, man. Like I can lead you to some stuff, but you still do your own homework, Still do your own, due diligence or whatever. And just hit me up if you have any questions, man. If I can help, I will all day. Um Let's see. All right, so let's go here. Global events that impact price. Um, okay. War, conflict, right? Um, Most recent war, Ukraine, Russia. Increases fear, disrupts supply chains. You don't know what blockades are gonna be. You don't know um You don't know whether oil is about to be messed up, the shipment, so it disrupts supply chains, right? Pandemics slows the economy and reduce earnings. We saw that with COVID. You know what I'm saying? So, um, we saw it shut the world down. So of course the economy slowed down. Of course it reduced earnings because nobody was outside spending any money. Central bank decisions. When I say that the feds are speaking, that's what that is. That is the feds. They come out and they tell you whether or not they're going to increase or decrease interest rates. Um, and those decisions affect everything, man. They affect your interest rates on loans, car loans, credit card loans, mortgage loans. And so, if he raises interest rates, hey man, like the market usually responds to that negatively. Like any day that you have a Fed speaking, um, if you're day trading or trying to hop into a play, be a usually I try to wait till after he make whatever speech he's gonna make to see how the market reacts to that. Don't try to if you unless you just want to roll the dice. Don't play with that. Don't play with when Powell is speaking about the Fed interest rates and stuff. Just wait it out. If he gonna speak at 11 o'clock in the morning, then you just sit tight, until after he done, and then you can see how that goes, right? Um, Natural disasters, right, which damage business operations and supply. We have a lot of hurricanes, in the South. Um, Florida, not Florida, California has earthquakes and those fires out there. So that type of stuff, man, affects the stock's price, you know. Trade agreements and tariffs impacts global business costs, which we spoke on briefly with that. Important if you're going to charge them more, um, you know, to to sell products to us, then it works both ways. Yep, Alex, man, tariffs been tearing us up. You know what I'm saying? So we see what that impact is, right? These are things that I'm sure all of y'all pay attention to, and you probably just didn't think about how it affects stock prices for you. Like you think about it, you like, man, I know that stock probably going up, you know what I'm saying, or going down, blah blah blah. But you probably didn't even look for the stock that was going up or going down. That's what we get. That's what you have to change. That's what we're working on changing right here. Like don't waste those thoughts. A lot of people, man, the same things I think I look at and stuff, man, y'all looking at it too. I'm just doing something different with the information than you are doing. You know what I'm saying? People in the market that's trading, they're looking at the same information. I bet you I can have a conversation with any of y'all about the tariff stuff and how you feel about it, how you feel about the war, how you felt about COVID, how you feel about what a hurricane did to either your area or another. We can have a conversation about this for an hour, right? And y'all can have either the same or more information than me. I'm just using it differently. People that's trading are just using the information differently, but you have the information. You know what I'm saying? You just have to use it differently, right? So, you have global economic reports and oil price shocks, right? And barrels of oil go up and down, man. And you could you could really take advantage of that. Like you could take advantage of those oil companies, energy companies. It's just not just oil. Like oil is energy. It's a part of the energy sector. So um energy is solar power. It's a lot of different stuff. You know what I'm saying? So energy is energy, right? And when a global event happens, right? Okay, this is kind of how the cycle works for it, right? So, all right, the event happened. Here come the war. Here come the rate cut or whatever, or the pandemic. Um, the media reports it, right? So you hear about it on the news, and investors react to it. Some of them emotionally, some logically, right? So that means that buying and selling activity is going to increase. So now the stock price is going to move up and down based on either the fear or people feeling like it's an opportunity, right? It's going to go that way every time, every single time. That is the cycle. That is how that works. Event happens, here comes the news, buying and selling increases, and the stock moves up or down. That simple, right? It is, I mean, nothing more, nothing less, So, like I said, when the pandemic happened, man, you had global lockdowns. The SP 500 dropped about, I think, like over 30% in weeks. You know what I'm saying? And it was a fear of a recession, supply chain collapse, and all that. So that, those global events right there had a bearish impact, right? Had people looking at banking on the market to go down, right? Um, let's see, around March, right, of 2020, the Federal Reserve, right, the Feds, who we were just referring to, the U.S. Central Bank, they cut interest rates to 0, right, percent, because this was, right after the COVID thing. And stocks rebounded real fast. And the reason that was bullish is because it lowered borrowing costs. You know what I'm saying? Which in turn led to more business support. You know what I'm saying? Like I said, when we was, just to give the example of war and conflict, like Russia and Ukraine, man, when that happened, when they invaded Ukraine, energy prices skyrocketed, man. and um stocks kind of like dropped in the short term, but that was strictly out of the field, like oil shortages and stuff, man. And people didn't know how the economy was gonna really be, disrupted. You feel me? But yeah, so that's how some of the global events, world events, like, man, we keep up with that stuff. You know what? You hear it, but this is just how I'm just trying to give you a different way to look at it. You know what I'm saying? Like, just you have the information, but use that information to help guide you to what section of stock news to look at, because we talking about how to find stuff to invest in, right? And that's like one of the main questions I get for sure. And that's a question that I understand, like, because I had to figure that out too. It's so much information, and once you find it, like, it's easy to give someone a website, but you like, man, what do I see it? You know what I'm saying? But I don't understand this. What am I looking at? You know what I mean? Um, but hopefully, with what I'm telling y'all now, that when you see it, you have a better understanding of what you're looking at. Because I just want you to see how when you see it, um, to think about how it's affecting the stock price, right? That's what this is about. This is about looking, all of these things are about how they affect the movement of a stock price. All right. That's what this is about. All right. So let's see. Investor emotions, right? So, we have greed, right? Which leads to aggressive buying, which means prices tend to go up, right? And we're looking at a bull market, right? In that instance, right? Because bulls are optimistic, you know what I'm saying? So, they expect prices to go up. Fear leads to panic selling. Tend to go down. Bear market, everybody expecting, not everybody, but bears are expecting prices to dip, FOMO, which is the fear of missing out, man, people chasing after gains. And what can happen is, this could lead to sudden price spikes. So that's like, I'll say, like, this is crypto, but like Doge and stuff. People, man, was buying that. They didn't even know what that was. But because so many people was buying it, it was running it. You feel me? Like, because people just had a fear of missing out. They seeing other people make money. They fearing that they're gonna miss out on that run. Let me throw my money in there. So they was chasing gains, right? That is very, 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 very risky, right? That strategy is very risky. It's going to be 50-50. You know what I'm saying? You can end up holding the bag, and you can hold the bag on that. You know what I'm saying? If you get in chasing, and you might buy something that's overpriced. You know what I mean? Um Another emotion, hope. Man, shoot. You can sit there and you can fall in love with a failing company. And you end up hoping that bad boy rebound because you down 60% on it. You held it a little bit too long. And you'd be like, man, I'm down so much on it. There's no need in selling it. You feel me? Because you hoping that you wake up one day and you went from being down 60% to being up 600%. And that's probably not gonna happen. It's probably not gonna happen. Uh, but you know, it happens to the best of us. I have done that myself. I have done that myself. Right. Um, Hold on 1 second. So let's see, confidence, right? So, um, when it comes to confidence, right? Um, that's more of my long-term people, man. Like, man, when you invest in a company long term, right? that means you believe in them. You know, you believe in either their business model, their products, or something. And uh a lot of time, right? I know everybody has heard someone say that if hey, you go to Walmart every day. That's your favorite store. You buy Jordans, right? You buy all the Jordans that come out. Why not? Why are you not invested in Nike? Why are you not invested in Walmart? Invest in the stuff that you use, right? Um, that's kind of like, I like that philosophy is good for somebody like to start with. Like if that's something that'll get you or that'll give you a direction to go in, just to know, give you somewhere to look at a stop, then so be it. It's way more, it's deeper than that. You got to look into more than just something you use. But if that gets you going, then so be it. You have to start somewhere. But you would buy something that you use because it's a product that you're confident in, right? You know that you use it. So you would invest in something long term that you use yourself, right? Um uh so you have uncertainty, right? Which is, no action or selling, which leads to volatility, and declines. So it's a pattern, man. Like everything is a pattern. Like we talked about trends, right? Um, um, and that's what the market is. It's trends and patterns, right? And you get to a point to where you try to predict them, right? You look for indications of a shift, in those patterns or those trends, right? So when it comes to investor emotions, right? Let's say that let's just go through a few of them, okay? We could say optimism and people start buying early, right? You could say excitement and the price rise, right? Um, you can say anxiety. You run through you run into anxiety because price start dropping. You feel me? Um, uh, you can have fear and panic, right? And that's when people start selling at the bottom. Um, and you can have hope because you're waiting on the price to stabilize, you know, and you can have some relief when you see people start buying again. You know what I'm saying? And then optimism return, and then it's just a cycle, man. So you can go through, man. There's a lot of emotions that that go into this. Like all right, so I think I mentioned AMC and GME earlier, right? So GameStop, which is GME, um, like investors went in hard on the Reddit hype. Like it was a meme stock. So the emotion that was attached to that was like greed, right? Which led to a lot of people buying. It was the fear of missing out, right? So everybody seen it running up crazy, didn't want to miss the run, so they just bought into it blindly. And it was the excitement from seeing it run up. You know what I'm saying? So what happened was that the price skyrocketed from $20 to over $400 in a few weeks, right? That was the initial thing that happened. Later on, right? When it all started crashing down, that's when fear plus panic set in, right? Because we're talking about emotions, right? So then fear and panic set in, the stock crashed back down, right? The lesson in that is, man, a lot of times emotions can override a company's fundamentals. You know what I'm saying? It can override the it can override the financials of a company. That company wasn't good. You know what I'm saying? I think they was on the brink of bankruptcy. You feel me? But those emotions that I just mentioned, man, outweigh everything else. Like no nobody cared that they was about to go, bankrupt. So the market moves not just on facts, but on how people feel about those facts. You know what I'm saying? Um, so all in all, GameStop, it started out with hope and excitement, right? It turned into fear, missing out, and greed, and then it ended with people panic selling it because it went to dropping. You know what I'm saying? So these emotions that I'm talking about, it caused those extreme price swings. You know what I mean? So emotions are a major part of investments, investing, not only with you holding the stock, but man, these are just some of the things to take into consideration because I'm sure the more you invest, the more you're going to feel these things yourself. You know what I mean? Um, so let's see, man. So let's see. We've been going an hour and 30. Oh goodness. Okay, so let's get to some resources, right? And y'all write these down. Like I tap into these regularly. All right. I tap into these regularly. Okay. One of my favorite sites is FinViz. It's a one-stop shop. FinViz has screeners and all type of stuff. It's a one-stop shop, for the most part. Maybe once I wrap this up, I'll just click on that real briefly. But yeah, and next to it I have just a quick, description of kind of like what you can get from them. You know what I'm saying? So you can have your stock screener. They have cool charts and market analysis. Yahoo Finance, good news. You can link your portfolio to it, and they'll track your portfolio for you. MarketWatch has good news. I tap into them every now and then. Investing.com could show you the economic calendar, so you can see when the feds are speaking and other economic stuff going on, jobs reports, that type of thing. You can get education here, like if you want to look up terms and all of this other good stuff. They do a good job at explaining and breaking down concepts. Um, let's see. Newsfield. So yeah, this give you like real time news alerts and stuff. Like it's good too. Like I scan here too. It's man, they have a section on here that's strictly for like FDA approvals for different like clinical trials and stuff for medicine and all of that good stuff. And man, sometimes man, those breakthroughs, like they may have a breakthrough on some type of treatment for a sickness. And man, you follow that back to the stock that's in control of that, boy, they run. You could double your money sometime on shares with that. And CNBC is great, for that too. But yeah, these are some of like the main ones that I use, but my favorite is FinViz because even in the news section of FinViz, it has news from all of these as well, right? But you can go through them and kind of like, pick out what's best for you. Um, so the stock market opens at like 9:30 a.m. Eastern time, right? It closes at 4 Eastern time. And most of us have jobs, right? Most of us, if not all. So you kind of have to like determine the most comfortable trading time for you, or the most comfortable time where you can actually like, man, you're gonna have to go through some of these sites, and you have to scan the news once a day. And that I don't mean sitting there reading every article or taking 3 hours, but man, you have to scan it every day just to see like what the sentiment is in the market, like what's moving the market. You know what I'm saying? Um, like for me. when I review like any of these sites or any other resource, you know what I'm saying? Um, I scan quick, man. So I scan for the latest news, company developments, upcoming earning reports, um, the most recent like analyst ratings because they can upgrade it and downgrade it, the ratings on it. Keep up with that, like FDA approvals, And when I go FDA approvals, I usually go for stocks that I'm familiar with already. So that'd be your Johnson and Johnsons and stuff like that. Um, you know, Starting out, like a lot of people look for the new hot stock every day, but I prefer to just kind of like stick to the stocks that I kind of like trade regularly, like I know, you know what I'm saying, when it come to trading. But man, just find put your list together, maybe 4 to 5 companies that you comfortable with, that you familiar with, and stick to those, study those, keep up with those, see how the news affect those stocks when they come out. You know what I'm saying? And learn off of that. You don't have to try to look for a new stock to, every day. But you should, when you get a minute, whether it's 5 minutes, 10 minutes, when you're brushing your teeth or something, man, just find one of these sites that you understand, that you cool with, just scroll through it to see what the news is, and you know, click on the headline that reaches out, that stands out to you. You know what I'm saying? Um, but yeah, so for the most part, man, you just have to be able to adapt, man. And you have to build a system. But the learning does not stop. Like you're gonna forever be learning something new about this. So, but yeah, so that's all I have right now on this, man. Y'all have any questions? You can put it in the chat.